Hey, welcome to The Payments Guy, your ultimate guide to demystifying the confusing world of merchant payments. I'm Frank Senna, your host, a merchant payment specialist with nearly a decade of experience. In each episode, we'll break down the toughest challenges in the payment space so you can be better informed when navigating payments for your own business. From minimizing the impact of chargebacks, avoiding funding issues, and ensuring you're never stuck without the ability to process payments, we'll help you make smarter decisions and grow your business. Let's get started. If you're a travel merchant selling dream vacations or anything travel related, but your processor sees you as too risky, that dream can turn into a funding nightmare. Today, we're going to break down how travel businesses can keep money flowing, get approved faster for payment solutions, and avoid getting their account terminated, which happens all the time in this space. Today, what we'll learn in the episode is why travel is high risk in the eyes of banks, what underwriting teams are looking for when they're assessing your application and determining whether or not they want to work with you or approve you for payment processing, how to structure your payments so that you don't get caught with your funds being held by your merchant processor, and how to reduce chargebacks and respond if your account is frozen. A single chargeback or a supplier issue can cripple working capital, so it's really important that you know what you're doing with your payments as a travel merchant. We're going to dive into that today. First, let's talk about why travel merchants are considered to be high risk. So that title of being high risk is actually assigned by the merchant banks. Merchant banks have underwriting teams, and when you need to get a merchant account, you have to go through this underwriting process and apply as if you were applying for a loan or for insurance. The underwriters are going to look under the hood of your business. They're going to make sure your business is legit. They're going to verify your identity as the owner. They're going to want to see any copies of contracts that you have with vendors that you use for your business. And they want to assess the risk around your business and determine whether or not the bank wants to take that risk on. So one thing the bank is going to be looking at is the future delivery, meaning you're collecting payment now, but the service that you're providing is not happening for weeks or months in the future. There's a lot of refund exposure there, meaning the bank has already paid you out for these transactions, and then down the road, some chargebacks come through. So now the bank got screwed because they paid you out, and now they have to pay back the merchant the cardholder that made that transaction. Another thing with travel that's a little risky is, from a merchant bank perspective, is unpredictable sales volumes. Sometimes there's spikes and peaks during the holiday travel season, or maybe you launch a new campaign that causes the transaction volume to boost or to spike. This can look suspicious to automated systems that banks use to manage risk and can result in your account having the funding held. Another thing too is if you're working with a single supplier for sellers like a tour operator or a hotel or even an airline, if they go under, the processor can hold you responsible for the refunds, even though you might have been reselling this service on behalf of someone else. And processors just want proof that you have control over suppliers, refunds, and customer communication. A couple things we're going to talk about are reserve funds, which is basically funds that are temporarily held by your processor to cover potential refunds or disputes. It's your money, but the bank has custody of it, and they can hold on to it until 6 months after the last transaction has been processed on your account, once your account has been closed. So that's what a reserve is, and that's why the banks like to hold it. It protects the banks from any customer issues. A chargeback is a forced reversal of a transaction when a cardholder disputes a charge. Basically, a cardholder can say, I never received this product, or I don't like the refund policy, so I'm coming to my bank to try to get that transaction refunded. And it causes headaches for merchant banks, and it can also cost them a lot of money. So minimizing chargebacks is essential to having a successful business. Let's talk about how to get approved for a merchant account as fast as possible. The number one golden rule when applying for a merchant account is to be transparent with your bank partner. These banks have underwriters whose jobs it is to poke holes in a merchant's story. They're going to take a look at your bank accounts. They're going to verify your identity, make sure you're not an identity thief. They're going to take a look at your processing history. They're going to look at your corporate docs and make sure that the business is legit. There's a lot that goes into this. They also want to see your supplier agreements and contracts. They're going to look at your website, make sure the website is compliant and that there's no red flags that might result in your business getting an exceptional amount of chargebacks or disputes or refunds. So these are all things that underwriters are looking at, and it's always good to provide this information up front in a nice, clean, organized way and make the underwriter's job easy for them. That's where I come in. That's what I specialize in, is making merchants package as easy to understand for an underwriter as possible, which really minimizes the back and forth between underwriting and the merchant and helps you get approved quickly, sometimes between 24 and 72 hours. It's also, I mentioned this a little bit, but making sure your website is compliant. Like, do you have visible pricing on the website? Is it clear how a customer can get a refund or cancel their order? Is it easy for the customer to contact you, the merchant? Is there a customer service phone number? Is there an email address? Or is there just one of those forms that you fill out and you don't know if someone's ever going to get back to you? Website's got to be complete. You can't have placeholder language or images or pages that say coming soon or something like that. You want to be straightforward and transparent about what the average transaction sizes are going to be, how quick delivery, how quickly a order will be fulfilled. So if I place the order today for a flight, but the flight's not for 2 months, that is expanded risk. We want to make it clear to the merchant bank what that time period is so they can assess the risk appropriately. And again, be upfront about cancellation windows and customer communication processes. You want to make it as easy as possible for customers to get in touch with you in case there is an issue. Let's talk about managing cash flow without getting flagged or getting your account terminated or put on hold, which unfortunately happens a lot to travel merchants. So let's understand why banks hold funds. They're basically, when a bank holds your funds, meaning they collect payment from your customers, but they're not paying it out to you, the merchant. They do this because it's protecting the bank against refunds that could occur months later. Another thing that merchants can do is using milestone billing. This means instead of charging for the full amount right up front, you split the charge into stages, like, okay, 30% upfront and then 70% closer to the departure date. This aligns payment timing with the service delivery, which lowers the exposure or the risk to the bank. Shorter delivery timeframes mean faster funding. So the less time between charge and travel date, the less risk your processor sees and the more likely that they will not hold the funds. Typically, one of the levers that a merchant bank will use is holding a merchant's funds as a way of hedging their own risk. They might also require a reserve on your account, and typically the reserves are started out with terms that are more favorable for the bank than for you. So it's important that after you demonstrate several months of processing without having issues, you ask the merchant bank to reconsider or review the terms of your reserve account. This may mean that instead of collecting 10% indefinitely on your account, they're now only going to collect 10% until they reach a certain amount, or they cap that reserve at a certain amount, maybe $100,000 or something like that. This will help ensure that okay, they're not just collecting money forever indefinitely, but it's actually capped at a certain amount. And then the bank is protected and now you're protected. You can also request that this reserve review is done, and maybe they will reduce the percentage of the reserve that they're collecting. So maybe instead of 10%, now they'll only collect 5% moving forward. We already said that you could put a cap on the reserve. That's another privilege that a merchant can get once they demonstrate clean processing. Or you may be able to ask that it becomes a 6-month rolling reserve. What this means is that the bank will withhold a set percentage of funds each month, like 10% each month for 6 months. And then in the 7th month, the bank will release to you the funds that they collected in the 1st month and collect 10% from month 7. So this way, it's a finite amount. It varies based on the seasonability of your business, and it protects the bank without over leveraging you as the merchant. So a couple ways that travel merchants can prevent chargebacks before they happen. Number one thing is setting clear expectations. Show the exact travel dates to your customers. Let them know when the refund cutoff is before they check out. Include that in the confirmation email. Just being overly clear with your customer base to help ensure that they know the terms of this purchase before they make the purchase. Another thing that's really helpful is ensuring that your billing descriptor is easy to recognize. The billing descriptor is when a cardholder makes a purchase and then they go and they look on their phone at their recent credit card purchases, and this is the descriptor that is on the transaction that they made with your website. You want to make sure that it's easy to understand. If you work at Acme Co., then the descriptor should say Acme Co Travel or something like that. Another thing is you can put your customer service phone number in the billing descriptor, and this makes it easier for customers to know how to get support without calling their credit card company and issuing a dispute. It's really nice to also include pre-trip reminders for your customers, sending them a confirmation email or a text, basically over communicating with the customer, making sure they know exactly when their trip is coming up so that they don't try to cancel it and get a refund at a later date. If you do have to refund customers, do it quickly. It will prevent getting a chargeback, and chargebacks can be really expensive for your business, especially if you end up losing the ability to process payments because you got too many chargebacks. It's also really important to use fraud tools wisely. There's a couple of different fraud tools that you can put on your merchant account. One is address verification service, which basically checks the address that the customer is putting in on your website when they make the purchase against the issuing bank's website address that they have on file for that cardholder. So this helps eliminate fraud, and while it could potentially hurt your conversion rate on the front end, it will prevent chargebacks or disputes from fraudulent transactions down the road, which ultimately in the long term is better for your business. Another fraud tool is 3D Secure. This is when if there is something sketchy about the transaction, that the cardholder will get a notification from their bank saying, hey, is this you? Click here or reply with 1 to let us know that this transaction is real. Again, that could hurt your conversions, but at the same time, it's minimizing fraud. So it's actually a good thing for your business. If your account gets shut down, don't freak out. It's not the end of the world. We can help you figure out a strategy. The first thing you need to do is gather your full transaction information, refund information, chargeback history immediately. Make sure that you get the reason for the termination in writing as well. If your account is put on hold and not terminated, but you get a warning basically saying, hey, we're seeing a lot of chargebacks coming through, please explain. Okay, let's get an explanation together. You can work with a third-party chargeback vendor to help get your chargebacks in good shape. They will even write a remediation plan for you and submit it to your processor if you do have chargeback issues like this. So it's really important that you are all over anything chargeback related. Make sure you're keeping your suppliers diversified and you're not dependent on just one supplier, because if they go out of business, then you go out of business, and that's not good. Make sure that you always have clear policies on your website to help avoid any confusion with customers, and making it super clear what the refund policy is. And make sure you're monitoring that dispute data, those chargebacks. It's really important that you are keeping a good eye on those, and you're showing your merchant bank, hey, we are all over these chargebacks. We're not going to let them happen. If this one came through, we identified what the issue was, and now we've updated our website or our policy, and this should minimize these chargebacks moving forward. So a few takeaways from our episode today are: the longer the travel window between when a customer purchases the product from you and when they actually take their trip, the more risk there is to your merchant bank. So we talked about a couple of strategies for mitigating that risk. Remember, you always want to be transparent and organized when you submit a merchant account application. This is what I do for a living. I help merchants to optimize their merchant account applications to get approved by underwriting and minimize that back and forth and help you get approved quickly. You want to make sure your documentation is organized and you're always being honest with that bank. You can utilize that split or milestone billing that we talked about earlier, where you're billing for part of the transaction up front and another part of it closer to the travel date. That will definitely help you get approved faster. And also making sure you're sending reminders to your customers before their trip so they know that it's coming up, and they know that if they did want to cancel, they need to do it within the cancellation window. If you need help finding a reliable payment processing solution for your travel business or protecting your current merchant account, reach out to us and we can help you make sure you keep the ability to process payments. Visit paydiverse.com or email support@paydiverse.com. We'd love to help you.